Ben ritrovati lunedì mattina sul foro del New York Stock Exchange. Gli indici tornano a perdere terreno dopo 4 giornate consecutive di guadagni. Ne parliamo con il mio ospite qui sul floor, che è Kenneth Polcari, che è Managing Director per ICAP Equities. Kenny, thank you so much for being with us. Come stai, Kenny?
Io sto bene, a lei?
Benissimo, il mercato, the market is not doing that great on today. We are struggling after 4 days up. Spain is in recession, and the economic data are not as good as we want it to be.
That's right. So no one should really be surprised because we've been talking about this now for really a week and a half. The macro U.S. data has been coming in flat to weaker versus flat to up the way it had been. There's been a lot of talk about, we're coming into the end of earnings season. May is coming. There's been this typical pattern over the last couple of years. And in fact, in my note this morning, I pointed that out, the way the pattern has worked. And in fact, it feels like once again they're trying to close it at the high, but the sense is that if the Fed doesn't come in and help out, that the market is once again going to move lower and test, the 1350 level. Now it's going to be interesting to see if the Fed lets that happen or not. We're getting close to the election season. And if you get too close to the election season, then the Fed is viewed as being political, and they don't want to do that, so they're going to have to do something sooner rather than later. But I'm not surprised. There's not a whole lot of volume, which just tells you that people are still confused and frustrated. There's a lot of news out of Spain, officially now in a recession. The story over there is not getting any better. There's confusion and there's concern over some of the elections, certainly France at the top of that list. And if Francois Hollande gets in, is he going to work with Angela Merkel? Is he going to try to change everything up? Is he going to go for more pro-growth policies, which might be the right thing to do, but it just causes confusion in the marketplace, so people sit it out.
And plus, it's the last day of the month.
Right, and you would expect the last day of the month, if anything, there might be a push towards the end of the day to close the market at its highs. Right now, it just feels like it doesn't really want to go up or down. It's just kind of stuck in this range. There's no directional driver at the moment. You would have thought that some of that macro data today would have caused some pressure on the market, but the fact that the market's not really pulling off just, to me, means it's the end of the month and people are sitting there trying to hold their positions, right, trying to hold the index.
Now, very briefly, if you talk to a lot of analysts, they will sound very optimistic. They say that the standard S&P 500 will really touch a new record high this year. But if you talk to Wall Street strategists, they have a totally different opinion. They say, hey, we already saw the highest of the year at the beginning of April. It's an election year, all the problems that we already have talked about. So it's not going to happen. Why do you think is that disconnect?
Well, there's a disconnect because you have to remember who you're talking to when you're talking to them, right? The economist and the guy who's working for the big banks trying to generate assets and bring assets in needs to be much more optimistic. Not that anyone's trying to be so pessimistic, but I think the view you get from Wall Street strategists or even guys that work on Wall Street is much more of a realistic view of where we are today, tomorrow, and next week. When you talk to one of these economists, they have a much longer view, right? They have 6 months, 8 months, 10 months out, or a year out, and so their view is not so short-term oriented. Strategists and traders on the street have a much more short-term view. Now, I do, though, I think that we probably have seen the highs, at least for now. I think we're going to struggle going into the spring and into the summer. And then if we don't start to get some clarity on what the election here is going to look like, certainly there's a lot of regulatory issues. There's a lot of tax issues that are going to impact this country at the end of the year. There's going to be expiration of tax benefits. There's going to be expiration of some policies that if the government doesn't do something about it, it's going to impact us big time in terms of next year and GDP and our economy. So there are lots of concerns going forward, and I don't necessarily see the light at the end of the tunnel right now because it's very confusing. And I think that's what you're seeing in the market. Investors are also confused.
And today you were saying you were expecting the market to go lower after the bad economic figures. So, okay, today is the last day of the month. We have some pressure up. So today it might be different. But the week is going to be very busy, and it's going to end with the job numbers on Friday. So if numbers will confirm what we saw today with the manufacturing that is really bad, that means that next week people will be rally again, waiting for Federal Reserve?
That's right. Well, listen, the non-farm payrolls number, which is going to be a big number. So as we move into the week, everyone's going to start focusing, right? The estimate is for plus 165,000 jobs. Now that's good. It's a positive number. I get it, but we need to do better than 200,000 jobs a month. 225, 250, really, in order to make some progress and headway and get this economy going. At plus 165, it's okay, but it's certainly not anything to write home about. And then you again have to look at the quality of the jobs being created. Are they temporary? Are they minimum wage jobs? What kinds of jobs are being created is really going to dictate kind of where we move forward. So there's a lot that investors are going to be watching out. And until they get some more clarity, it's easier to sit back and do nothing. Because don't forget, a lot of these big asset managers, it's not like they're not invested. They're already invested. So if the market moves up or down, they'll just participate along the way, and they maybe trade around a core position in stocks that move one way or the other big outside of the range, right? But for the most part, they're invested, and they're just going to sit and watch until there's more clarity.
Now, very briefly, technical levels that we're watching today.
I think we're hitting our head on 1400, right? We can't sit. We keep struggling with that all last week. We hit it, we bounced off. We hit it, we bounced off. So I think today we're going to 1400 on the upside. Certainly on the downside, you don't have to worry until you get to 1375 is where there's really support. 1376 is where there's really support on the S&P. Although again, like I said, I don't really think we're going to do much of anything today. I think we're going to stay in a very tight trading range, being at the last day of the month. Tomorrow's May 1st. The month starts all over again, and so it's a different story tomorrow. But I think we're in the 1375, 1400 trading range right now. And if Uncle Benny comes out, if Ben Bernanke comes out,
we know who he is.
if Ben Bernanke comes out and indicates that they stand ready or that they're going to extend Operation Twist, then you'll see the market move higher because that's what it wants.
Okay, so we have to sit and wait for Uncle Benny. Thank you, Kenny. Thank you so much for being with us.
Grazie a lei.
E grazie a voi per l'attenzione. Dal Flore è tutto.